Okay, we'll go ahead and kick things off. Thanks everyone for joining us. I'm Scott Roberts with CFA Society Atlanta. We've got a fantastic update for you today on the view of Washington and the state of the very not normal 2024 election. So certainly thank you all for joining us. Before we move into today's content, I do want to highlight three upcoming events I think our members will get great value from. First, next week, please join us in person at the Invesco Midtown Atlanta headquarters on October 9th for the compelling case for private real estate credit. And then in November 6th, please join us as we celebrate the newest class of CFA charter holders at our annual conferment dinner. And then a week later on the 13th, please join us in person at the Buckhead Club for what I think will be a very fascinating discussion as we look at the anatomy of a private markets deal, both from the private equity perspective and private credit. Of course, all the details will be on the website, including the sign-up links. Now, moving to today's content, we are extremely excited to have Libby Cantrill join us from PIMCO. She is head of U.S. policy and a managing director. Many of you know her from CNBC and Bloomberg with her timely updates about all things in U.S. policy. As a reminder, please submit your questions at the bottom of the screen. We'll save Q&A for the end after Libby's presentation. And with that, Libby, I'll turn the call over to you. Thank you.
Okay, great. Well, thanks so much. There is no shortage of events. I've been working on my vice president debate recap, although I'm not sure it will matter very much, although we can certainly talk about that. So nice to be with a bunch of fellow CFAs. I just re-upped my New York Society membership after basically being barraged with emails for not doing that for a while. So, but nice to be with you all. So we'll talk a little bit about the election, kind of the state of the race, how we are seeing the next 34 days playing out, not that anybody's counting. And then, importantly, how our clients at PIMCO and how investors should, might be thinking about 2025 and beyond in terms of economic and policies and market implications. So let me just share my screen. Just a second here. Sorry. Okay. Sorry. This never works when you actually need it to. Sorry, just a second. All right.
Perfect.
Okay, perfect. Sorry about that. Okay, so this has been, clearly an eventful 12 weeks. Ironically, and I do think it's sort of stranger than fiction, if you think about, what's happened from the June 27th debate to the failed assassination attempt of Trump to, basically the party coalescing around Harris, the Democratic Party coalescing around Harris. Ironically, though, for all of the drama, and we'll talk a little bit about kind of how we're handicapping the race looks very similar to how it did in the spring when Biden was still on the top of the ticket, in that it is basically a dead heat. But again, we'll talk about that in just a minute. In terms of sort of nationally speaking, Harris, again, not to be glib here, but she has gone from kind of zero to hero in that her approval ratings have increased significantly. They were about 36% as of about 8 weeks ago. Now they're 48%. It's actually the biggest increase that any politician has had since George W. Bush post 9/11. So a huge increase in sort of favorability. Importantly, as well, is that it's not only kind of her absolute favorability ratings, but it's also the net favorability rating. In politics, it matters in many ways just as much as how many people like you as how many people don't like you. And because a lot of people are now kind of motivated to vote against people as much as they are to vote for somebody. And in that way, she has a net favorability rating, so net positive favorability rating, which is again significant and pretty much a departure from what she looked like just as recently as 8 weeks ago. Trump, his approval rating has actually increased a bit as well, particularly since that failed assassination attempt. he's still sort of underwater in terms of his net favorability rating. But again, he's a very solid, he's been kind of solidly in the sort of 45, 46% range for the last few weeks. In terms of national polling, Harris is leading, basically by about 2 points, all within a margin of error. But of course, as many of you know, in Georgia, it is not the national kind of, the temperature that matters. It is not the popular vote, of course, that matters in our system. It is the Electoral College, and due to kind of where the key Electoral College states are, this election will come down to, basically 7 states, including where many of you are located in Georgia. And I don't need to tell you this. I'm sure you're just being inundated with, campaign ads and what have you. If you look at the green box, this is the polling as of late last week. It basically just shows that Harris leads in some states, Trump leads in others, but all within a very small margin, and importantly, all within a margin of error. If you also look at the yellow box, what you see is that Biden at this point in the cycle relative to Harris was doing much better than she is. He was leading by quite a bit, more than, relative to Trump than again she is. And of course, then only went on to win these states by as you all know, in Georgia, an incredibly small margin. And so if 2024 is a repeat of 2020, then you would sort of, conclude that Harris would need to be doing much better in these states in order to win. That's because this polling error that we saw last year that showed that, Biden was doing much better than he ended up doing actually, and from an electoral, perspective in terms of the actual outcome. Now, this is kind of what's called polling error, the difference between polling and the outcome. Polling error has gone to kind of Republicans' benefit over the last 2 cycles, meaning that pollsters underestimated how Republicans did do, and they did much better in many of these states than, again, where they were polling. But polling error is symmetric, meaning that as much as polling error can be underrepresenting or under kind of estimating Trump's support, it could also be underestimating Harris's support. And actually, that's what we saw in 2012, that polls were underestimating Obama's support in that election. So again, this is something just to keep in mind when you're looking at the polling. Polling is sort of rife with error. The margin of error that pollsters state is actually just one source of error. That's just sampling error. But there's lots of other sources of polling error. Another is partisan response bias, meaning sometimes one party is more likely to respond to pollsters than another. And then, of course, modeling who is going to turn out is it's a very difficult task. Sometimes in some cycles, pollsters get it right. A lot of times they get it wrong. And so, again, there's lots of different sources of polling error. I think like a rule of thumb should be that you should double the sort of stated polling error on any sort of given poll. So if it says 3%, you basically think of it as 6%. So according to that, again, this race is basically just a complete dead heat. In terms of issues that matter for voters outside of just the polling, this idea of gas and groceries, that the price of a gallon of gas, the price of a gallon of milk, all of these things matter to voters. And on that score, both Biden and Harris are vulnerable. Biden more so than Harris. Harris is actually polling better on the economy than Biden was, and actually has narrowed the gap between her and Trump much more than Biden did, but she still pulls behind Trump on average on the economy. So this is a vulnerability. So if this is like, these kitchen table issues are forefront in many voters' minds. So if Harris loses, it will partly be because of this issue. This is also another source of vulnerability. Honestly, was expecting Trump to do kind of a better job of prosecuting this in the debate several weeks ago. J.D. Vance tried to yesterday a bit, but she's vulnerable on this, right? She ran on lots of things that are quite out of step with not only the median Democratic voter today, but also with the median sort of Pennsylvanian or Georgian voter, in terms of, banning on fracking, Medicare for all, decriminalization of the southern border, more increases in tax rates, and what have you. So this is again another source of sort of vulnerability for her, that may or may not be the top of mind for voters. Now, she's disavowed all of this. She's walked back from all of this. But it's, again, a question of whether voters can actually trust what she is saying. Now, of course, Trump is also vulnerable. He has some legal issues, as we all know. His temperament and his sort of character pulls way behind Harris. And that stuff really does matter. But he's also vulnerable on the issues, and the Dobbs issue in particular is something that really does animate, particularly female voters. What we saw and coming out of the midterms on the upper left-hand side, this is the exit polls according to CNN, was that the Dobbs decision, the decision to overturn Roe v. Wade, really did matter to female voters in the midterms. If you fast forward to the end of 2023 on the upper right-hand corner, what you see is that this still matters. Women in particular are still upset about this decision. And then the two lower graphs indicate that, women vote more than men, and they've been voting increasingly Democratic. So, similarly, if Trump loses, it will be partly because of this issue, and that women and some men are still sort of upset about the long tail of the overturning again of Roe v. Wade. Now, from an investor's perspective, while the kind of the top of the ticket may capture the imagination, actually, these down ballot races matter just as much in terms of, the things that investors care about, fiscal policy in particular, spending and taxes. As a reminder, there are 100 members in the Senate. A third of those seats are up for re-election this cycle. Of those, a third, or 34, Democrats are defending 23. Republicans are only defending 11. And of those 23, 8 are in pretty vulnerable states. 3 of those 8 are super vulnerable. Montana is the most important. So if you want to just look at kind of one state that could decide the entire direction of the Senate, it is Montana. So I think in terms of just, kind of regardless of what happens at the top of the ticket, the odds favor the Senate flipping from narrow Democratic control to narrow Republican control, again, just because of this math, if you will, and the fact that the Democrats are really on their back foot in terms of defending so many more seats, and in seats that are in battleground states. Now, one, kind of nuance here is that for most legislation, you still need 60 votes, not just 50. So there are ways of kind of workarounds. There's something called budget reconciliation, which is a vehicle that allows for the ruling party to use one time a year. It can only be used on tax bills. But this is the way that Trump passed his Trump tax cuts and Jobs Act back in 2017. He did not have 60 votes. He only had 52 in the Senate. Biden passed the IRA, the Inflation Reduction Act, with only 50 votes in the Senate using budget reconciliation. So the upshot here is that Republicans are very likely to take back the Senate, but they won't have those 60 votes that they would need for most legislation. But again, there's that one workaround, which is called budget reconciliation, which we should expect Republicans to use if they control both chambers, even if it's by a very narrow margin. Now, the House, 435 members in the House, Republicans lead by 4 seats. Right now, Republicans are defending more seats than Democrats are, so it's a bit of a reverse dynamic. Usually the House goes the way of the White House. It's a national election. All 435 members are up for re-election. So usually the party that takes over the White House also picks up seats in the House. This election cycle, so different from most election cycles, this is different. Many of the seats that Republicans are defending are in places like New York, like California, so big blue states. And so you could very much see Trump winning, but actually the Democrats taking back some of those Republican seats in those blue states, and as a result, winning the House. So, odds, I think, favor, again, a Republican Senate. and a narrowly Democratic House, meaning that both chambers flip, which actually would be kind of the first time ever in the history of the Republic where that happens, where each chamber flips to opposite party control. Again, just underscoring how unusual this election cycle is. So the top of the ticket, this is, I know, not super instructive. Our traders are like, this does not help me. But I really, truly think it is 50-50. I could tell you a story about why I think there are advantages that benefit the Harris campaign, enthusiasm, fundraising. She has actually a better ground game. She has better infrastructure on the ground in some of these swing states. But Trump has an electoral college advantage. He also has the advantage that people are really upset about kind of gas and groceries. So again, I think at this point, it's a coin flip. And as a result, in an election that will be decided at the margin, any marginal event could matter. So going back to the VP debate, does that matter what happened last night? Maybe at the margin. If you are a Trump curious voter that you might not like his kind of the way that he appears on the debate or what have you, or these rallies, JD Vance gave a pretty polished performance yesterday. So that might actually sway you. If you're a sort of a Harris curious voter and you like kind of the avuncular, friendly style of Tim Walz, then yesterday's debate may have swung you that way. So again, it's not to say that we're going to see big shifts in polling because of these debates. But I do think that, again, where you have a marginal, where things will be decided at the margin, any kind of marginal event actually does matter. So higher conviction, though, again, in Congress, more likely a divided Congress. And then the second most likely scenario, if you just add these things up, a Republican Congress. And then the least likely, a Democratic Congress, only because, again, that very challenged Senate map. Now, importantly, and kind of sadly, there are two things that kind of post-election that could matter from a market's perspective. One is that we are not going to know the election outcome on November 5th. So just tell all of your family that, like, this is not happening. As you all know, in Georgia, they're going to be hand counting the ballots. Wisconsin and Pennsylvania are super slow states to count. They don't allow for pre-processing of absentee ballots, meaning that all that stuff has to happen on election day. It's just going to be a very kind of slow count in those, probably in those three states. Arizona's pretty slow to count as well. So it means that we probably won't know the election until you wake up on November 6th, the election result. You may not know it until November 7th. And if it's super close, we could actually see recounts in some states. So this could be, sadly, for those of us who cover this for a living, an even longer general election cycle that you may, again, not know the night of November 5th, if not even that week. Now, the second thing, again, unfortunately, is that this could give, open the door to sort of civil unrest, potentially political violence. This is a bit of a misleading poll, so take this with a grain of salt, but this is a poll that basically asks people whether they would resort to violence in order to save the country. Saving the country is, I think is sort of undefined here. But what you see is that, all parties, regardless, have increased their willingness, at least in name, to use violence. And so again, that kind of increases the risk that you could sort of see some civil unrest or what have you. And again, potential volatility. We usually sell volatility going into elections. We don't really trade the elections at PIMCO, right? We're long-term investors. We're like, we manage kind of a Titanic, here in terms of just how big the firm is. So we don't kind of whip around positions. Oftentimes, though, we do find that volatility is overpriced going into these elections. So sometimes we sell them. This election cycle, we probably aren't for a variety of reasons. But anyway, so what are kind of the big, takeaways here? I think that the biggest probably for those of us who are in the bond market is that deficits are going to remain high regardless of who wins. In other words, deficits will be the biggest loser regardless of which party wins. And that's, I think, for maybe a little bit more nuance here than people maybe appreciate. If you look at kind of the green bars here, this is like the base case for the fiscal outlook. What you see is like 6% deficit. This is like steady state, right? This also assumes no recession. This assumes stable interest rates and what have you. But it also assumes current law, meaning that it assumes that all of the Trump tax cuts at the end of 2025 all expire. That is unlikely to happen. Congress, regardless of which party controls the White House or Congress, is not likely to let all of those Trump tax cuts expire. So then if you add back the expense of those, which I've done in the yellow bar, then you're getting 7.5% to 8% deficit. This is like, holy smokes, right? Like we're like, this is very unusual to be running deficits like this at, when the economy is doing well, and we are not in a recession and we're not at war necessarily. So why, and again, this is before any policy changes. So this is again before any new spending or what have you. Why is this the case? Some of this is because interest expense is bigger, right? So interest expenses as of last year, 2023, in 2024, it's going to be a little bit higher, like 12%. So interest expense is going to be almost as high as the Pentagon spending, because interest rates are so much higher than they used to be. Interest expense used to be about 3 or 4% of the government's budget. So now again, 10, 12%. But a big portion of the budget is what neither candidate wants to touch or even talk about, which are Medicare and Social Security. Super important programs, but also super expensive programs, particularly as our country ages and more people are drawing on those programs and paying in. So on the right-hand side, this is the expected growth rate according to the CBO of these programs. What you see is, again, Social Security and Medicare going up higher and faster than any of these other programs. So my view is that the reason why this looks so bad is because no one's going to do anything about this. Now, again, these are really important programs, so I'm not trying to say these are not, but again, very expensive. Now, why aren't they going to do anything about it? Because they poll really well. It's like one of the very few things Americans actually agree on is they don't want members of Congress to touch their benefits. It is very bipartisan as well. So I guess the big question is like, does this matter, right? Does this matter that, no one, and this is a cartoon from 2011. I've been doing this job for a long time. And I went back to one of my old client books, and this is still very much apropos, right? Neither side basically wants to do anything that they don't have to. And actually, interestingly, I would say neither side wants to do any of these things. Democrats don't really want to raise taxes either, even though they talk about it. And certainly now Republicans, at least sort of led by President Trump, also don't want to do anything on the entitlement side. So again, they are actually seeing eye to eye. But does this matter, right? Does this matter that the U.S. just doesn't seem to care about deficits? Deficits were mentioned exactly 0 times yesterday, by the way, in the debate. I think, our view is like, of course this matters. Of course, running 7, 8% deficits, 100% debt to GDP, like, does this make the U.S. a lot more vulnerable to, a fiscal crisis? For sure. However, of course, the U.S. has a special characteristic that no other country has, which is our currency is the reserve currency of the world. And I think even more specifically, the Treasury security is the reserve asset of the world, meaning there is a structural bid for our debt, regardless of what our deficits look like. So that kind of being said, do we think that, this is going to necessarily lead to a fiscal crisis? Probably not anytime soon, as long as the dollar is king. And this kind of shows you, different dynamics in which, the dollar continues to dominate, whether it's FX transaction volume, global commerce. This is another way to look at it. Bill Gross, the founder of PIMCO, used to talk about the dollar being the cleanest dirty shirt, meaning you have to go to a party, you have to you go to your closet, all of your shirts are dirty. You put on your cleanest dirty shirt, doesn't look great on an absolute basis, but on a relative basis, it looks a lot better. We are the cleanest dirty shirt. The U.S. is the cleanest dirty shirt. And again, that doesn't look like it's going to change anytime soon. How we do think this will make its way, though, through into markets is that the yield curve, which is basically like this, right, should be more like this, meaning that it should be upward sloping, that if you're an investor on the long end of the yield curve, you should be getting what's called term premium for holding bonds at this level of kind of fiscal deficit. So we do think that, some of that term premium will come back. this is all this is public information. We have a curve steepener on in many of our portfolios as a result, which will take advantage of that kind of normalization of the shape of the yield curve. Okay, so what else? Outside of deficits remaining high and nobody is apparently talking about them, what else can we expect? On the Harris side, I'd say most of her agenda is pretty status quo for Biden, right? There's just not much big difference. So meaning that if she gets elected, there's just not going to be that much of a difference, particularly if she has a Republican Senate, which is likely. There's not going to be an IRA 2.0. At the same time, the IRA, the Inflation Reduction Act, is not going anywhere, right? She's not going to reverse that. I think the biggest source of risk for the markets under Harris is around taxation. And I just can't reinforce this enough. If 2024 was dominated by talking about the election, 2025 will be dominated talking about tax. It's just going to be all tax all the time in DC. People are already talking about it. And that's because, again, these individual Trump tax cuts all expire at the end of 2025. This is a very busy slide. But if you look at these two, the first two columns with the numbers, this shows you kind of the various differences between kind of pre-2017 and post-2017, and what kind of is on the table in the 2025 debate. And then we've also sort of speculated, with a big underscoring of speculated, these sort of various differences under different presidents and different congressional outcomes. I think the upshot here, again, is that the top rate could be going up under Harris, but also the corporate tax rate, which does not expire, so Congress doesn't actually have to do anything about that, could also be going up in order to pay for some more tax cuts for, low-income families, like the child tax credit and what have you. And then also we could be seeing some talk about capital gains as well. So, long way of saying, I think more tax risk under Harris than under Trump. Trump's going to want to continue everything, right? He's just going to extend everything, if not maybe tweak some things, but effectively everything will just be extended. The SALT cap, which is what our clients really care about in New York and California, that likely is going to be raised by a bit, but not as much as it would be under Harris. Other things, though, so under Trump, which would be more disruptive from a market perspective, again, Harris much more status quo for the market. Trump more disruptive because it would be more change, right, from Biden, is going to be around, tariffs and then immigration and then deregulation to some extent. On tariffs, I do think this is going to be a bit subtle but important difference between Trump 1.0 and Trump 2.0. Trump 1.0 was just focused on China, right? Just focused on the trade deficit with China, focused on getting a deal with China. However, what's happened since 2018, when we first put the tariffs on China, the trade deficit has gone down. Now, the reason why am I talking about the trade deficit so much is because he talks about the trade deficit. Many of us may have a different kind of scorecard in terms of, looking at how the U.S. is doing vis-a-vis the rest of the world. In Trump world, it is the goods trade deficit. We may agree with this, we may disagree with this. This is just the reality. And as a result, even though the trade deficit with China has gone down, I think they Trump folks take this as a sign that actually tariffs work. The trade deficit's gone up basically across, in every other country, in every other dimension, where we had an existing deficit. And so I think in Trump 2.0, they're still going to be focused on China, but there's going to be a focus on all of these other countries. And this is why he's talked about not only putting 60% tariff on China, but a 10% baseline tariff on all these other countries. Now, does he really go to 60% of China? Probably not. Does he really put a 10% baseline tariff on everybody? Probably not. But is the direction of travel here very clear on tariffs? Yes, it is going up. And it's going to probably go up more than just on China. It will go up with other countries as well. And again, the ones that I think are most vulnerable are the ones where you've seen the highest increase. Now, he can do all of this without Congress. This is something I think people don't understand, is that, like, Congress used to have the authority around tariffs. Tariffs is fiscal policy, right? Tariffs are just taxes, just a fancy way to say taxes. But then Congress gave up those rights to the presidency, ironically thinking that the president would be less political around tariffs than what Congress is. So that may be wrong. But the upshot of this is that the president can basically do a lot on tariffs without Congress. This is a lot of words on a page, but just sort of underscores that he can do all of these things. Now, some of them might be litigated, but the courts have actually, been pretty differential to the president around trade law. This stuff also pulls well, particularly on China. Even though people don't really love tariffs, they really do like going like sort of being muscular on China. And in addition, I would just say to tariffs, which again, direction of travel is clear. They're either staying where they are and staying high, or they're increasing. You could see also some other similarities between Trump and Harris on China. One of those is on export controls. These are prohibitions of like selling into China in terms of advanced technology companies here in the United States. That will continue certainly under Harris, but also under Trump. And I think just ratchet it up on things like quantum computing and AI. And you could also see just more sort of scrutiny on both kind of where China's investing in the United States, but also importantly, how US-based investors are investing in China. This is already starting. The Biden administration has started this sort of trial executive order that basically is like a pilot program that looks at how strategic US investors are investing in certain areas of China. But I could see this really expanding under Trump. So all to say that there's a lot more melding of the minds on China, and the direction of travel here is pretty clear. On immigration, this is again a lot of words on a page, but I think this is also important to talk about from an economic perspective. Is that immigration? Again, there are also things that the president can do unilaterally, does not need Congress, particularly on the flow of immigrants. It's a little bit harder on like to deport immigrants, even though Trump has said that and JD Vance kind of said that last night. But it's a lot easier just to basically restrict the flow. And Biden has actually done a lot of this already. So in many ways, Trump would just sort of be extending this. But this could have real economic impacts, right? We may agree or disagree with this from a policy perspective, but from an economic perspective, these migrants have been working and they've been helping the economy. And Powell has talked about this, and lots of other policymakers have pointed out this fact. And so if you're sort of slowing or stopping immigration flows, that will have an economic impact. Again, reducing the stock of immigrants, a lot harder to do, probably needs Congress, but I think Trump will do what he can in terms of impacting change. I'll talk about the Fed in just a minute, but maybe I'll just kind of summarize all of this in terms of the economic impact. So we have kind of Trump versus Harris. This is Trump. Trump's kind of a mixed bag, right? Like there's some good, there's some bad, and then there's a lot of status quo. Tariffs are kind of hit both ways. I think the market sort of erroneously just focuses on the inflation impact, but there's just as much of a growth impact in terms of impacting export sectors and impacting demand and what have you. There's also a good deficit impact, actually tariffs against taxes raise revenue, and kind of a lot of revenue, like $400 billion of revenue should all these tariffs be put in place. Immigration, again, kind of a mixed bag as well, a little bit more of a growth story than an inflation story, but there's also good, right? The animal spirits along with expiring, extending the expiring tax cuts, and then also, incremental deregulation and what have you. Another, in terms of Harris, a lot more status quo, right? There's a lot of yellow here. Again, not much divergence from what we would have expected from the Biden administration. In terms of kind of markets typically do well kind of regardless, honestly. We've been telling our clients, and we like active fixed income right now. Obviously, we're a bond manager. We do think there's also a lot of value in fixed income right now. But we're sort of telling our clients, like, stay invested. If you're in cash, cash out of cash, get into fixed income. But don't try to trade the election. Like, that is just a fool's errand. This shows you the S&P performance 1 year after the election. And it's like what you see is like, the market has done well under both. A lot of us remember, those the early morning after Trump sort of surprisingly won, and futures were like crashing or what have you. and then completely rebounded, and then like, just skyrocketed. So very difficult to kind of trade around the election. We do think it's like a little bit clearer in terms of sectors and sector impact. There's some common sectors that will do well under both. Defense will do well under both. A lot of support right now for obviously defending against China, defending against Iran, Russia, what have you. Technology, I think, will be one of those sectors that will have face headwinds regardless. I joke, like, don't go short NVIDIA based on this, although a couple of weeks ago, I wish I had said you should short NVIDIA. But, this is just going to mean that, technology companies are going to continue to be kind of the, just the vampire squid, if you will, in Washington. That's a title that used to be called, that Goldman was reserved for Goldman back after the financial crisis. But, big is bad in Washington. So technology companies, not so great. And also a lot, obviously some more export controls and what have you. That will likely limit the growth of tech companies. And then there are some actual differences: traditional energy versus renewables, financials versus healthcare, what have you. So this is if we're playing the election, if we're actually taking into consideration the election impact, is more on the sector side, and much more just towards like incremental tilts than anything else. The last thing I'll just say, because we are obviously a bond market, is a bond manager is the Fed. I've been traveling around the world visiting with our clients, and a lot of our clients are really concerned about the independence of the Fed, and potentially what particularly what President Trump could do. If you remember back in April, there was that Wall Street Journal report that speculated that not only does Trump want to fire Powell, but he also wants to put himself on the Fed. Of course, the Trump campaign disavowed that very quickly. It was a little bit bad, ridiculous reporting. But even if Trump wanted to do that, right, there are two things. One, he cannot put himself on the Fed. Two, he can't actually even fire Powell. The threshold for firing a governor from the Fed is criminality. And just because, Trump has a different view on monetary policy from Powell does not mean it's a fireable offense. So it's very clear. The other thing is that Trump will not have, or the next president will not have, an opportunity to put a new person on the Fed until 2026. That's when Adriana Kugler's term expires, and as a result, the Fed that Biden has right now is going to be the same Fed that Trump would have or Harris would have in 2025, regardless. So while Trump can jawbone the Fed, we kind of doubt it matters. So our view is, of course, we're not sanguine about anything, but like, we think this is overstated in terms of concerns about, the lack of independence of the Fed or what have you. The last thing I'll just leave you with is maybe a more cheerful note, is that markets like to do well regardless. Again, kind of to this point about staying invested. If you look at actually how markets have performed under sort of various compositions of both Congress and who's in the White House, they have done marginally better in divided government, right? When there's been a divided chamber, divided Congress, that's convenient because that's probably what we're likely to get after the election. But again, markets have done well kind of regardless. So some of this just shows you the markets want to go up, kind of regardless of what the political environment is in Washington. So let me stop there. I'm happy to take questions or clarify anything I said.
Yeah, Libby, this is fantastic. So we've got a few questions that relate to slide 25. If we could go back to that, please.
Sure.
Yeah, so this is a fantastic page, all the different scenarios, and both of the questions are in general, in terms about your thoughts about, the 2017 Tax Cuts and Jobs Act being extended. I just want people to focus on this page for a minute because all the scenarios you have listed here, but both of these questions have to do with your opinion about, everything being extended, which we can see here that there's kind of different paths forward. For those interested in this topic, please take another look at this on 25, because I think it's very helpful.
Yeah, I mean, so I think this is like some of the things that are being asked about kind of the top rate and about the estate tax. So this, yeah, just to be clear, to the top rate here, this is the differences between the two in the first two columns and then different scenarios. Yeah, and I think like what you sort of see here is that like likely to go up under Harris, may go up a touch actually under Trump if there's divided Congress. We'll see. I know he would be very resistant to that, but if there's a Democratic House and they want a pound of flesh for something else that Trump wants, I don't have this here, but the 20% pass-through rate for small businesses and for very rich individuals is something that the Republicans really want to keep. And so you could see that being kind of part of a negotiation. So it's going to be kind of a trade-off in terms of these various provisions. The estate tax, I have a question mark on whether it's extended into the Democratic Congress. But if you think about it, if there's a Democratic Congress, it means that the Senate is 50-50, because right now the Senate's 51-49. Democrats are going to lose that West Virginia seat, so that means it gets to 50-50. They're not going to pick up Florida or Texas. Sorry for those people who want to holding out hope. That's not going to happen. So that means that like the best night they can have is 50-50. I guess they could, but anyway, that like the near best night they could have is 50-50. That means that the marginal vote in that Democratic Senate, a very narrowly Democratic Senate, will be John Tester from Montana, who likes the estate tax exemption because a lot of the big farms in Montana are subjected to the estate tax. And even though this exemption is quite generous, with inflation and what have you, a lot of folks would be impacted if the exemption were to revert back to sort of pre-TCJA levels. I'm from Colorado originally. I worked for a member from Colorado on the Hill, and this was always like you would just always be so surprised as like who was lobbying on the estate tax. Like folks do not look like they're not like necessarily rich people who are they're like people and like who are farmers or what have you. So the estate tax is like has some weird bedfellows. And so I think that would probably be extended almost regardless. Again, maybe have a little bit less conviction if there's a full Democratic sweep, but still pretty high confidence there. And then like things like the child tax credit, the reason that doesn't matter to the markets necessarily, but it is stimulative. The child tax credit, the way that Democrats have designed it, it's a refundable tax credit. That's a fancy way for meaning like you get it regardless if you pay taxes or not. And so that is effectively like a cash transfer, and could A, be inflationary, but B, could also be stimulative or both. So that's also something just to keep your eyes out for, because I think that's where also there's strange bedfellows. Like J.D. Vance and Tim Walz were like tripping over each other yesterday to agree with how much they both support that provision. So that could also be important. And then obviously cap gains and corporate tax rate, as I said, those various scenarios are also important. But I will just say we have a lot of humility around this. This is like, anyone who says they know exactly what's going to happen in Washington next year or in the election is kind of, full of it, excuse my expression. But so this is like our best guess in terms of kind of the political dynamics and kind of how we see things playing out, but again, with quite a bit of humility.
One of the questions that came up was about internal polling versus the polling that we see. Do you think internal polls are more accurate than what we see on 538?
Yes, I do. I mean, internal polling is actually it's why the campaigns do it. It's a lot more expensive the way they do it. There's a lot more data. They are often more reliable than external polling. Interestingly, we just had our big client conference in Newport Beach last week, and I interviewed David Plouffe, who was the kind of a mastermind behind Obama's victory in 2008 and 2012, but also is advising the Harris campaign. He could not talk really very much about what kind of data he is seeing, but one, he said he sees a ton of data, much more. He sees it at the congressional level. So he's not just seeing it at the state level, he's actually seeing it at the congressional level. And then he also, in the green room also said to me, the external polling this time is not so different from the internal polling from what he's seeing. He thinks Harris might be doing a little bit better in North Carolina than what the polls say. Pennsylvania is basically neck and neck. And something I did not say is that, Georgia is important. It's a very important state, but Pennsylvania is probably the most important. So in some ways, like how goes Pennsylvania, so goes the White House. So, a good, you can look at 538. Again, you can look at Real Clear Politics. I just use Real Clear Politics because it's not perfect. It doesn't weight the pollsters based on track record, but because it doesn't weight it, it's basically just a clean sample. Some of that weighting, I think, can be quite subjective about how those, various outfits are kind of weighting the various pollsters. So, but any of them, 538, Real Clear Politics, or actually Nate Silver's new website called the Silver Bulletin, are all kind of helpful. But they also basically all show that Pennsylvania is like effectively like a dead heat. There's not really, clear advantage to either candidate.
New question about the port strike, and might Biden step in, and what effect may that have?
Yeah, I mean, it is not good. Like that plus what's happening in the Middle East right now. I mean, if you think about October surprises, and if you just think again about marginal events, right? So this is like, 48% of each, so 96% of the population's like knows how they're going to vote, right? So it's really this like marginal voter who may not vote. They don't have to vote. And of course, I'm saying, 96% of the 60% of people who actually do vote, because there are lots of folks who don't vote regardless, not registered. So I do think the port strike could be impactful. He's talking in a way that's pretty sympathetic to the unions. So, it's going to be dicey if he steps in, even for a cooling off period right before the election. What I think probably is more likely is that I don't know this for sure, but there's probably pressure behind the scenes kind of to try to come to some sort of resolution, but that he probably won't step in until he absolutely has to. But if it does come, if it's like 2 weeks and people are starting to see like, ships lining up at the ports and, they're not getting their Amazon stuff, I do think that he could step in, but I think that will be kind of a last resort type of thing, just because of the dance that they're doing with the union. And then I also think like what's happening in the Middle East is like difficult, right? I mean, it's like, this is obviously, I mean, people are dying, so that's very difficult, but in terms of just from a purely kind of political lens, there are a lot of Jewish people in Pennsylvania who have historically voted for Democrats. There are a lot of Muslims in Michigan who've historically voted for Democrats. So this is like for Harris and Biden, but for Harris in particular, this is something that's gonna, I think, be potentially a vulnerability for her. Just question of how much and whether it actually matters in the end.
Okay, one more question, and this has to do with the possibility of the Dems carrying the House and the presidency. How do you think Republicans behave if they take the Senate?
Yeah, I mean, in some ways, again, going back to that conversation with David Plouffe, I mean, in some ways, if you've actually looked at times where there have been compromises, it's been when you've had a divided government, and then not just a Democrat in the White House, you've also seen it with Republicans in the White House, but you could actually see like, could there be a deal on immigration? Maybe. I do think that like if things like the debt ceiling become less of an issue, there are definitely at least 10, if not 20, if not 30 Republicans who will vote for a debt ceiling increase and not be an issue. I do think that the tax cuts become kind of a knife fight, honestly, if you have, regardless of what composition of Congress or who's in the White House, if you have a divided Congress, it's going to be difficult and kind of will dominate next year. But I think in some ways you probably have like a little bit more upside in terms of some areas where you could get a deal, again, an incremental deal. Like obviously the bar is very low these days in terms of what Congress can achieve. And definitely nothing like Simpson Bowles. If you remember, that was the last time where you had a Democratic president and you had a split Congress when deficits were actually kind of part of the discussion. obviously Biden had a split Congress, he has one right now. But that was when you actually saw a real attempt at some deficit reduction, but that's not going to happen. So don't hold your breath on that. But maybe on immigration, and again, then taxes, I think, is going to be the big thing. The last thing I'll just say, and I don't know if this is relevant to anybody, but we care about energy permitting, both from a renewables perspective, but also from a traditional energy perspective, because we have energy positions in both spaces. And I do think you could see something on energy permitting reform, meaning like sort of deregulation or reducing a lot of these sort of kind of obstacles, bureaucratic obstacles, come through either next year. You could even see it in the lame duck session, which is the session actually after the election, before the new Congress comes in. So that's something, if you care about that, that's something just to flag. I think that's maybe under the radar, but something that's possible that we could see in the next 12 months.
Okay, I think we answered all the questions in the queue. So this is last call for Q&A. We'll see if anybody else comes in, but this has been a fantastic presentation, super helpful. Yeah, it looks like we've answered everything on the list. So we certainly thank you for covering so much ground in a short amount of time. And we look forward to seeing you on TV again, I'm sure sometime soon.
Well, and good luck to all of you in Georgia.
No kidding.
And go vote, regardless of what your politics are, go vote. It's super important.
Absolutely. Thank you so much, Libby.
All right, thanks a lot. Okay, take care. Okay, bye-bye.